Hi everyone, today let's talk about Nvidia earnings, then we'll talk about the Fed minutes, as well as the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So they say revenue triples on Nvidia earnings, but you can see here the stock is actually down a little bit. So interesting on the day here for Nvidia earnings, 4.2 versus 3.37, massive beat. Revenue also massive beat. Revenue growth year over year, 207%, massive. Net income, 9.24 billion, and everything continues to look very good for this company. As you would expect, it has been rocketing higher because investors are seeing this value. But even with all this positivity and continued explosive growth, Nvidia stock did not go higher. It did rally into the earnings announcement, which is interesting. They also announced new products like the GH200 GPU, so they're continuing to do everything well on all fronts. They're facing a little bit of competition here and there from companies like ARM as well as AMD, but realistically they are leading the pack, and it is interesting to see they are not really moving on this massive earnings. Moving over to the Fed minutes, basically they said all of the same things that we already expected. They are still not talking about any cuts as you would expect. They have not talked about a single cut or even suggested when a cut might happen. Right now, we talked about it yesterday in the video, saying that there are no cuts currently slated for the next couple of months. I think the first possible cut is all the way out in May, but really the interesting thing is that there are no hikes currently priced into the markets, and in the notes here they say they will need to stay restrictive until the data shows that they can get back to their 2% goal. We are still well above that, sitting in the 3.5% to 4% range, depending on whether you're looking at the headline or the core numbers. Again, they mentioned that there were no talks of cuts. That's not what you would want to see. And as a result of this, the 10-year yield did go down slightly, which is interesting. It has been trending down for a while, so it didn't jump up on these Fed minutes. So a bit of a nothing burger. They are saying everything that they have been saying. They mentioned that the economy is slowing, which is what you wanted to see if inflation is going to come down. The economy has been very hot. The jobs market has been very hot, and everything still looks good from that perspective. But they did mention that the non-farms came in at 150,000, which was one of the slowest months that we've seen during the recovery. Again, nothing substantial out of this, and it really didn't move markets. Moving over to economic data, existing home sales, worse than expectations, previous read, revised down, not what you would want to see. 10-year tips, however, coming in at 2.1. That is pretty good. Previous read was basically in the same range. It's actually a little bit higher than the previous read, but basically this means inflation for the longer term is expected to get back into that 2% range still. And then looking at tomorrow, we have core durable goods here at 8:30. Fairly interesting initial jobless claims as always. This one's actually on Wednesday instead of Thursday due to the holiday. Also, and then we have some Michigan data, consumer sentiment, consumer expectations, inflation expectations, fairly interesting. And then don't forget, Thursday is the holiday for Thanksgiving and the markets will be closed. Moving over to Max Payne for the Friday session, it's all the way up at 448 now, which is interesting. Total options, 1.25 million. Quite a bit higher than we have been seeing here recently, except for the peak weeks. Current stock price, 452.88. Put call ratio still very high above that 3 mark. And this chart really looks substantially different. So you got put walls here at 450. Don't necessarily think we're going to get below that. You got 455 here as a call wall, top of the put sitting at 456. And then out here at 460, you got a little bit of puts coming into the market, which is interesting. So you got a pretty high peak here at 450, some at 460. It does seem like we're going to stay in that range. If we get into the 450 area, might end up holding to the downside. We'll see how that plays out. But right now, 450 to 455 makes sense going into the end of the week. Moving over to the charts, starting off with the SPY on the hourly and the daily, you can see we basically went sideways once the markets opened, but we fell throughout the pre-market, threw some wicks to the wick high in the pre-market from Friday. Also got very close to testing the 55 EMA on the 1-hour chart. We're chopping right on top of my level here, 453.07, just below it by 5 cents. And then you can see we are below that trend line now on the hourly chart. We were below it the whole time here on the daily chart. We talked about getting very close to that level and not quite testing it. Momentum continues to tick over. RSI breaking down here. Inside candle on the daily chart. That is a reversal style setup. You do have to pay attention to that. We did have something like that here going back to Monday the 13th. And then we end up with a massive gap higher and rally higher. But now we are at another clear resistance, inside candle after selling off a little bit. Do have to pay attention to that going into the Wednesday. And we're also testing the highs here from 1 September and this bottom of the consolidation from 20 July. Moving over to the NASDAQ, very similar thesis, except a little bit more aggressive to the downside. You can see all of these candles testing that 55, testing my level here at 387.05. Ended up holding that level, bounced a little bit from there. Then we had the Nvidia earnings throwing that big wick to that same level. I was watching that level pretty closely. If it gets below here, I do think we're going to see a pretty big pullback. You do have the bottom of this consolidation right in that 384.16 area. And then the 144 sitting at 382.19. Looking at the daily chart again, inside candle, momentum selling off, RSI pulling back, everything we've been talking about. Just seems like we got that peak day yesterday, and then Nvidia earnings could not catalyze us any further to the upside. You can see we are down about 50 cents after hours. Not what you would want to see if we're going to get the continuation higher. Moving over to the Russell and the Dow, similar thesis here on the daily chart, but the Russell looked quite a bit weaker and it did close on its low, which is not what you would want to see. It's been trading in the same range for a while. Once I saw this candle on the Thursday of last week, I expected this to pull back a little bit more, but we've ended up chopping in here for a couple of days now. And then we got a pretty significant close after the rally, continuation, test the level, pull back from there. Now, if we're going to follow through here, you got the 21 sitting all the way down at 170.53. That could be interesting. Otherwise, you got the 55 EMA at 174.25. That could be an interesting level as well. Momentum stepping down. It had been rallying for 2 days in a row here. We didn't even get to overbought conditions, so it does tell me that there could be more rally to come after we see that pullback on the Russell. And then Dow, inside candle, momentum fading, RSI fading, very similar to the SPY and the NASDAQ. Moving over to the equal weighted S&Ps, you can see we got a complete doji. Looks like a straight plus sign there. Definitely interesting. Got the update yesterday. You would have wanted to see that continue up to 149.82. Obviously, we didn't get that. We gapped down and dojied. Still holding above all the EMAs and SMAs, but momentum fading, RSI fading, just like everything else. Inside candle, not great. Again, we did get a similar move inside candle, but it does look a little bit different here on the equal weighted S&Ps. This inside candle is right at the highs on that up move yesterday. This one was more a straight sideways price action, held that level and then rallied. So if this breaks down here tomorrow, that means to me we're going to see that more significant pullback. Again, looking at the 55 and possibly the 21 as well as VWAP down in this 140 range. Moving over to Apple and Tesla. Apple continues to hold this rally. It's been really resilient. Still holding above this peak from 5 September. Still holding above that 190 level. As long as that holds, we should be in good shape here. It is showing a little bit of strength coming off of that level after testing it in the pre-market. Momentum bearish, RSI bearish, not what you would want to see. But this continues to be a melt up. Apple does not always respond exactly as you would expect, just because it is so resilient as a stock. As long as 190 holds, you could look for 194, certainly possible. But if this level breaks here, you got the 55 EMA sitting all the way down at 184.58. Looking at Tesla just for a moment, you can see no momentum. RSI breaking down from overbought conditions. This trend line continues to hold as resistance at 244.76. Got very close to testing it, couldn't quite get there. The fact that we didn't test it does show some weakness, but you could wait for that full test similar to what we got here. Got that initial test, significant pullback, trying to get a second test. If it breaks down again from this area, that would be a pretty big bearish indicator to me. Overall, basically nothing has changed, still in this sideways chop. Moving over to Nvidia and Microsoft, you can see that earnings announcement threw a big wick to the downside and it's selling off further after hours. Not great, bearish momentum, bearish RSI. If Nvidia continues to move lower, that could be quite bearish for markets. And then looking at Microsoft on the daily chart, another down candle. We got one of those on Friday last week. Another one of those here today. And you can see momentum continues to roll over, and this is not great here on RSI either. So we got the breakdown below the SMA, retest on that big volume, and then another breakdown here. So not great. You can see that kind of in reverse going up, breaking out, retesting, breaking out again, and that ended up giving us that pretty significant rally. It does seem like we're seeing the reverse of that coming out of overbought conditions. I did add some levels here as well, 372.08. We are below that after hours. We were able to hold it during the market. And then below that, I now have 376.07, putting that at the wick low from Friday last week. And then I added a level here at the all-time highs at 378.77. Moving over to staples and discretionary. Staples showing a little bit of strength. Discretionary selling off a little bit. Interesting. Momentum on staples looks like it's about to upswing. We talked about it holding that 55 EMA and holding the 200. Everything looks okay here. For about another $1 of upside on staples, certainly possible. Momentum on discretionaries, not great. Continues to be bearish. RSI selling off. Basically, we're seeing a move towards risk off, in my opinion. Then moving over to technology here and gold, I wanted to highlight technology also getting an inside candle. Added some levels here up at that 186 area, added one at 183.70, and then one at 182.42. We'll see how this holds up. It is selling off a little bit after hours, just like most things. And then gold, massive gap higher. So we gapped from around 183.37 up to around 185.56. Sold off a little bit, but we're back at this range, gap through that trend line, momentum swinging towards bullish, RSI looking bullish. It does seem like people are moving towards safer investments like gold. Moving over to the 50-day average and the 200-day average, you can see slight step down on 50-day breadth. Basically holding flat at this 52 level on the 200-day breadth, really not showing us much of anything besides momentum continuing to roll over towards the bearish side at least a little bit. And then looking at yields here just for a moment, you can see 2-year yield not doing much anything, continues to sideways chop right in the same range, but 10-year still riding right within this range, right to the very peak of this triangle. It'll definitely be interesting to see what happens once we get out of this structure. Is it going to break lower, retest, and move down to the 144, or will it rocket higher, retest, and then go back into this upper range? Definitely something to watch here. Typically falling wedges like this are more of a bullish structure, but it doesn't mean that it can't go either way. Just gives you a % chance towards the bullish side, in my opinion. Moving over to the dollar, just for a moment, it looks like we double bottomed at around that 103.20 level. See, we touched it once, came back into that zone, touched it again here right around market open, rallied up to my resistance, 103.64. Touched that level, pulled back slightly, so we'll see what happens here on the hourly chart. Definitely interesting. The fact that we didn't make it down to my 103 area means that we did show a little bit of strength, didn't quite test support, found an area to rally from, tested resistance, and now we'll see what happens. If it pulls back to the 21 and holds, then we could be looking for a push up to the 144 EMA, up around 104.17. That would be interesting. You also have the 144 EMA on the daily chart at 103.83. Momentum starting to tick back towards bullish. We're almost oversold here on the daily chart on the dollar. Typically, you want to see a little bit more consolidation around these lows before you expect a change of trend, but we are getting into those conditions where you would expect at least some kind of a pullback. 21 EMA sitting all the way up at 105.43 on the daily chart. So starting to show some signs of reversal, but definitely still a downtrend. You can see we've had a couple of rallies already in this move, like we saw from 6 November up until about 10 November. And then we had a big significant move with just a couple of bull days and then another lower low. And you also notice that these moves have gotten a little bit smaller here towards the end. One big push, second big push, third big push is a little bit weaker. And typically that's where you start to stall out on these bigger moves. So definitely something to watch on the dollar. Moving over to bonds, interesting to see here on JNK breaking above that trend line, showing some bullishness, momentum not confirming, RSI kind of moving a little bit higher, but everything else moved lower and JNK moved higher. That could be an interesting little precursor to the upside. If it can hold above that trend line, 92.50 is my next level, definitely interesting. And then similarly here on TLT, when compared to the 10-year yield, we are still inside of this wedge, still riding that upper trend line. If it breaks out, could be interesting watching for the 96 to 96.50 area. It is up a little bit after hours. I'm definitely going to keep an eye on JNK as we go forward. If JNK continues to show strength, that could be an indicator that this little sell-off is going to be short-lived. Moving over to volatility, move index breaking down below that trend line makes sense with yields selling off a little bit more and bonds showing some strength. VIX, on the other hand, continues to sell off, and it does look like it's accelerating a little bit. I did end up putting a level here at 1275. I do think that's interesting right at the bottom of these consolidation areas. If you touch that level and show some strength, kind of like we did here, that could be an interesting move. Momentum continues to tick back towards bullish despite price action going lower, RSI still going lower, not above the SMA yet. So far, everything still looks bullish, even with markets moving lower when it comes to volatility. Moving over to my accounts, you can see I was down a little bit on the day, but this is really not real until we start to get below this 384 level. That is where I start to lose some of my profits. I did roll these down and in a little bit, so now I'm out to only 6 days from now, and I still keep a max profit anywhere above 384, which is only about 1.5% lower, and you can see after hours we are continuing to sell off. We'll go ahead and look at the profit profile on these positions after this, but right now, still holding a 383 with $11 credit. Max profit on those calls is around $2,200, and you can see I only have about a $500 profit, so there's about another $1,500 of protection available there. Still out to 17 days on that position, which is much longer than I like to be. But this rally was super aggressive, and I was anticipating that it was going to pull back. Sure enough, it's starting to pull back a little bit. You can see my shares were down $1,100, but I was able to mitigate quite a bit of that. And realistically, I won't lose any money until we start to get below my call strikes. I just have to be patient on those positions. Again, here's what that profit profile looks like. You can see my max profit at expiration would be $11,000 on that position. You can see it there. And then I really don't start to lose any money till we get down to this 355.80 level, which is quite a bit lower than current prices. Obviously, I can be patient. I do start to lose a little bit of profit once we get below this 384 level, which is that first call strike like I talked about. But because I have so much credit, I do have a lot of protection to the downside. So just being patient right now, I do think that there is a little bit of risk to the downside. I've been talking about it for a while, and we have continued to melt up. But like I said before, nothing goes in a straight line forever, and we are continuing to see signs of slowing to the upside. Let me know down in the comment section what you think of Nvidia's earnings. Can they continue to blow out these numbers, and will they be able to maintain their current price evaluation, as it is massive, but they are delivering massive earnings and massive growth at the same time? And also let me know what you think about the Fed minutes. When are we going to see a cut? And will we see another hike before we see cuts next year? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.